Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Pål and Ville. This is Fintech Daydreaming.
Welcome back, ladies and gentlemen, to another fantastic episode of Fintech Daydreaming. We are storming along now in season 10. We've hit double numbers. We are now on episode 2 of season 10 of Fintech Daydreaming. What started off as a little sideline hobby for Ville and myself has turned into a burning passion for us, and I hope we will be grayer, older, wiser in many years' time, sitting here still doing Fintech Daydreaming with all of our fantastic friends, idols, and experts in the world of banking, fintech, money, financial crime, whatever happens to be the most interesting part for discussion as we move along. But as always, I cannot do this on my own. I sometimes wonder if I would be successful doing this on my own, but I know I wouldn't. So I always do this with my friend Ville. So Ville, how are you?
I am good. After the vacation period, things are getting really busy, really fast, as we expected. Not only with the podcast and all the fantastic guests that we have lined up, but also work-wise. Regulation moves forward, institutions move forward, technology moves forward, a lot to do, and it's going to be a very busy end of the year. Also, like we talked about in the last episode, a lot of events coming up. So looking forward to seeing a lot of our listeners as well in the multiple conferences that I will be attending and speaking in as well. So again, nice and busy.
The life of a banker, right? The life of a banker.
Indeed.
But, you know, Ville, we've spoken a lot about money in various different forms, be that everything from cryptocurrencies to digital assets to public money, private money. There's been discussions in the past around this notion of programmable money. But one of the things that I think generally most people will say is that when you look at cash, when you look at money, it's dumb, right? It's a number, it's a piece of paper, it's a coin, it's just dumb stuff. Well, our guest today, which first of all is a return guest, because we had Chris here with us, season 5, that's quite some time ago back, talking about the book that he had published then, has written a new book. And in his book, he is making an argument that money, in actual fact, can be intelligent. So, Chris, it is fantastic to have you back with us here on the podcast. Thank you for joining us. And I'm looking forward to having a little bit of a chat with you around what you mean by intelligent money. I'm thinking there must be something here with generative AI and those sort of things. But for the few hermits that have been living under a rock for the last 25 years, maybe you want to just share who is Chris Skinner? Where do you come from? Where are you heading? And what is your superpower?
Well, hello, Pål and Ville. It's nice to come back and talk to you again. The background to my new book is all about the fact that I was arguing in my head about decentralized money versus centralized money and generative AI versus smart money and where all that was going. So that's a big theme. I guess my superpower is that I'm a nerd, geek, whatever you want to call me, and every single day I write something around 1,000 words around money on thefinancer.com, and as a result of that, I've written 18 business books, but I've also written 5 children's books about Captain Cake and the Candy Crew, which was far more fun.
I know you're selling more copies of the children book.
Not at the moment, but you never know. It's all about diversity, teamwork, loyalty, and friendship.
Oh, fantastic. So you're teaching ethics and how to be a good human being to children.
Absolutely. And the fact that every team member has a different responsibility and capability. Yeah. So, it's not meant to be that sort of boring because it's actually really fun. Designed for like 3 to 8, 10 years old.
And
And
are you
that all
using?
came out of the pandemic, actually, because during the pandemic, I was stuck here for 2 years in Poland, which is where I live. And my children were 4 years old, and I just got fed up reading them stories from other people. So I started making up stories for them.
Wonderful, wonderful. Oh, I like that. To a certain degree, maybe all your business books come from a similar perspective, right? Sitting there bored and wanting to make up stories for old, boring bankers in the world as well.
Well, I was called by one great, old banker that I was the grey-haired troublemaker. And I objected to the grey hair because, as you can see, my hair isn't, it's a little bit grey, but it's not that grey. But yes, I am a troublemaker. So I put my finger in the places of the financial markets that most people don't want to talk about, and I debate them. By way of example, decentralized versus centralized currencies, which is currently my hot topic. Although actually, my newest hot topic is around trust and transparency, but we'll come to that.
Mm. But I think they all sort of link together. I mean, it's one of the reasons why you're so revered in the industry is you do open up the lid on boxes that other people try to keep shut, and you do stick your fingers in there and bring some of these discussions up to what I would call more of a sensible level, right? There's been an awful lot of painful, weird, horrific discussions around Bitcoin and decentralized finance and all of those sort of things. Villa and I generally tend to keep ourselves a little bit away from it and stick up a hand sometimes and say, well, this is maybe going a little bit too far-fetched. But you're bringing it all back together, and you're talking about, I think you term in your book something that you're calling, is it hi-fi? So hybrid finance, you're bringing the sort of decentralized and centralized back together again. In doing so, are you, I'm a little bit, I'm trying to vision the two because decentralized tends to be around non-fiat currencies, whereas centralized is very much built around fiat currencies and backed by central banks, etc. How do you make the two stick together in a sensible way without it ending up a mess?
Well, basically, these days, currencies are assets, the same as gold and oil. And so it's a choice of the individual as to what assets they want to control and have in their portfolio.
Mm.
And many of us know that digital assets, particularly crypto, is pretty unstable. So if that's your choice, you have to take the risk of investments in that portfolio. But most of us would have diversified portfolios between property, gold, oil, and fiat currencies, as well as cryptocurrencies. So that's your choice. And I think the challenge is that decentralized currencies are very attractive if you are a libertarian and you don't like state government or central government and central banks and currencies. And it works, but it only works in certain ways, which at the moment are still quite fledgling, even after 15 years, because that's how long it's been since Bitcoin white paper came out from Satoshi Nakamoto. But I'm actually quite a fan of crypto because the fact is that I can transact with anybody, anywhere, everywhere around the whole of the earth immediately in real time with zero fees. And that's what brings people towards decentralized currencies because it means it doesn't recognize states, governments, borders, or central banks. It recognizes the network of the people. And that's where the friction sits right now. And that's what the book started to emerge from, the friction between central control versus the network of the people.
But isn't
I mean, yeah,
go for it, Villa?
yeah. So by the nature, as you define decentralized currencies like cryptocurrencies, at least, well, the ones that are decentralized, is that it's not backed by any central entity. Some would argue that they are backed by nothing. Now, I'm sure you get this question a lot when you talk about cryptocurrencies and the inherent value in that, but it sure sounds like the value of a cryptocurrency is basically the hopes and prayers of the community around it, rather than backed by anything tangible, just like with fiat currencies, which are always backed by states and governments and central banks ultimately.
I think you have to go back to the Bretton Woods Agreement, Ville, which is the old agreement that currency is backed by a physical asset like gold. And then we moved away from that. So then it became the US dollar, the UK pound, the euro, the yen, yuan, all these currencies are just backed by a government's promise. So what's the difference between a government's promise and the promise of the people of the network?
Yeah, well, the governments are stable entities, and with basically armies and
no, don't give me that, because if you have, hundreds of millions of people, in fact, billions of people, all networking, and they all say you can trust this, that's much stronger than a central domestic government, isn't it? You live in a country, what? Finland is 5 million people.
Mm-hmm.
So therefore, do you trust 5 million people more than you would trust 3 billion people?
In this case, yes. Because again, there are no legal obligations which ultimately define how do you enforce value behind these things. So again,
but then that brings in a different angle, which is
behind it is different from having this, let's call it a little bit abstract notion of a decentralized.
That brings in the different angle, which Pål and I were talking about earlier before we started, which is hi-fi, hybrid finance. So you have cryptocurrencies backed by the network of the people that are billions, that's backed by regulated entities and exchanges that are controlled to a certain extent by legal structures of governments. And the question is, which governments? And the ones I use tend to be mainly American and British because of my accent. Although I live in Poland, just to be absolutely clear, I'm global and European. I'm not British. But it's more about where's the trust and how do you regulate the trust. So we saw FTX, and we've seen Mt. Gox and loads of other issues in decentralized crypto, where the exchanges went bust because they were not acting in a regulated manner. That was no criticism of the currency of Bitcoin or Ethereum or Dogecoin or anything else you use. It was a criticism of the fact that you have unregulated trading entities. And so that's where hybrid finance comes in. And right now there's a really interesting debate around crypto and decentralized versus centralized and regulated. What I want is regulated and choice, which I think gives you both.
I think there's another dimension to this discussion as well, though, which is around sort of consumer protection, right? When you look at decentralized finance today, you lose your money, right? There is no comeback, there's no protection, there's no insurance, there's no nothing. Whereas with centralized finance, or at least with a central bank liability, there is a certain element of protection, consumer protection, etc. And the banks need to stand behind you. And if a bank goes bust, there is a certain amount of insurance that covers some of your assets, etc. If we could find a way of bringing that level of protection and validation over into DeFi, then I think that I would partially agree with you, Chris. But at the moment, I feel like the world of DeFi is still a little bit of a Wild West, right? And unless you are smart enough and want to take the time and effort to really understand the implications of what you're doing and the level of protection, security, and risk that you're taking upon yourself, I think there's a big complexity still, and where the world is getting more and more complex when it comes to finance. We're looking at more and more fundamental uncertainty of the future, And there is a continued decline of financial literacy, particularly in the younger generation. And you throw in this notion of, social media with influencers saying the future is Bitcoin, and now you've got deep fakes of Elon Musk saying I'll give you 1,000 Bitcoins and everything else going on. There is an element of, do you trust the 500 million behind the unnamed entities on this DeFi, or do you trust, maybe not in every country, the government that sits behind the central bank and the regulations and the bank and etc. I think there's still that dichotomy in all of this.
Yeah, I think the point you're making, Pål, is that it moves us into the multiverse of money, which is maybe my next book. It's kind of, you've got so many dimensions taking place right now about what do you trust and how do you trust and what is transparency and who is managing the system and who do you trust to manage your system. So when we talk about decentralized finance, I always come back to this. It's regulated by the people of the network. And to begin with, in fact, a lot of people, particularly libertarians, had a problem with me because I talked about you can't have money without government. And they assumed I meant central government and I was a statist or statist, depending on how you want to say it. And I'm not. I'm just being realistic. There has to be something that you can come back to and say, if I lose my money, I can get it back. It has some guarantee. But then bear in mind that, in the US, CFTC is about $250,000. In Europe, it's 100,000 euros. In UK, it's 85,000 pounds. So that's what the banks give you as a guarantee. Now, if you invest in decentralized finance, you don't have that guarantee, full stop. So if the money goes, it's gone. And I think that's where rubber hits the road. But at the moment, particularly Gen Z, or Gen Z, if you're American, say that they trust the network of the people more than perhaps the governments of the people. And this friction is really interesting because the internet wasn't around when I was born, probably not when you were born. And it's grown up in the last 3 decades into something that connects the globe and everybody into a network of people. And that's where decentralized finance really is redefining the way we think about money and value exchange.
Yeah, no, I agree with all of that. I think that, like I said, whether we want to call it a dichotomy or, a Wild West or anything else, the network or the internet and everything that's been going on more recently on the internet, including, the world of finance, is both fantastically good, but also at the same time ridiculously evil, right? There is so much deep fake, there is so much bad actors, bad things happening. It is how do you bring that protection and security and reliability to the individuals to make sure that going forwards they've got that stability that they need. Because at the end of the day, we are, whether you want to say cryptocurrencies or anything else, it all boils down to financial assets or money that people, individuals rely on, depend upon to be able to have their life. So there has to be a strong element of security, protection, and like you said, governance. It all comes down to that governance model and who is actually responsible for that governance model. Because we've also seen this growth of DAOs, where the DAO is supposed to be governed by the people, but you only need a certain amount of bad actors or a over proportion of assets or coins with a certain individual for that model, that governance model, to fall apart.
But that's also why you need to have a diverse portfolio.
Yeah.
You don't put all of your investment in crypto.
No.
You 20% is maybe the limit. You need other investments in property and stock markets, in bonds, and in other areas. And you follow the Warren Buffett rule, which trying to remember what it is. It's something like 70% stocks, 30% bonds. You basically try and work the markets so you have a diverse portfolio where you spread the risk. And that's the key thing, that going back to risk management, when we talk about the consumer protections of the regulatory authorities that are centralized, they give you some protection, but it's down to you to do the rest. And you need to make sure you spread the risk and don't just rely on one asset or one area to give you your return.
I think we're getting back to what I mentioned earlier around, the decline of financial literacy and the complexity in a money world at the moment. You're absolutely right, but
More specific on that one, Paul, I mean, most people probably don't even understand what we're talking about.
exactly, that's my point. And as you make the options and capabilities available to them, grow substantially, they just get more and more confused. So I'm hoping now that that's going to make us a transition into you really explaining what you mean by intelligent money. Is intelligent money, in the context that you're putting it, going to help us and the consumers and the next generation of humanity be able to deal with this complexity? Or is it just programmable money based on crypto?
Before I answer, what does Villa think?
So first of all, I have to apologize. Well, I haven't read the book, but to me, it sounds like intelligence value that has some kind of logic and conditions surrounding it. So again, you're able to use it in different contexts based on the data elements that you have around it. That's to me what it sounds like. And I'm really looking forward to getting the exact definition from you, Chris, of course. But then again, comparing that to the components of money as it's defined today, which is completely fungible, and how do you reconcile between intelligent money and the fungibility of the money requirements that we have today in the society? But again, over to you, Chris.
Not bad. From my side, 30 years ago, we talked about intermediaries and the whole idea that we could delegate authority to the network to manage our money for us. And I guess that's where I've returned to in the latest book, which is, rather than having to think about money, money thinks for you. So you can delegate authority to your network and your apps and your systems to do what you need to ensure that you manage your risk and your portfolio in a way that will ensure future profitability, but at the same time, avoid risk of loss. So that's where I come from. And I think we've finally got to the stage with generative finance based on generative AI, where we can do that. When ChatGPT came out, it wasn't anything new, to be honest. I mean, we've been talking about this for 30 years, going back to the intermediaries, but we didn't have the right technologies. And ChatGPT was the breakthrough moment where we did have the right technologies. And then we've been followed by Gemini from Google and some other services that are taking us forward very quickly. But the core of this is, why should we have to spend so much time worrying about our money and our portfolio and our risk when we can delegate it to a system? And if we can do that, then we can just live our lives. Isn't that the point?
So are we
Yes.
heading towards a notion where money becomes invisible, banking becomes invisible,
It already
and
is.
we start doing unconscious banking?
No, it already is invisible. So, and now we talk about unconscious or embedded banking and payments and services. And the only issue with that is the risk and whether you have the assets and the value to live your life. So the job of the network today is to aggregate, integrate, and advise and alert us as to when there are issues in our portfolio and risk. And that is purely what money is all about. If you have no euros, or if you have 5 billion euros, the only difference is, can you pay your bills? Can you actually live your life? doesn't, there's nothing in between. And it doesn't matter if you're Elon Musk or Chris Skinner or Power Cogdal or Villasonto. The difference is, can you manage your risk? And that's what the technology of the intelligent generative financial system should be giving you.
Let me circle back to the definition of intelligent money a little bit. And this is interesting to me, especially because in context of working with central bank digital currencies over the past 5 years, we've had a lot of conversations around the definition of programmable money and what that actually means. And for example, if you look at the European Central Bank's publications around the digital euro, they're quite clear that they want to steer away from talking about programmable money and instead talk about conditional payments. And that refers back to my comment earlier with regards to one feature of money, that it has to be fungible. So again, €1 must be fully exchangeable to the other. And if you start implementing programmable or indeed intelligent features into the money itself, that eliminates the fungibility element of money. So question there maybe is that maybe a bit technical question, but anyway, interesting to me, which is that, should the intelligence and programmability be a feature of the money or the container? And what's the difference?
I'm glad you asked it, Ville, because there are two aspects to intelligent money. One is the intelligence of advising and providing you with service, and the other is the intelligence of recording and reporting. And the first is what the consumer, the citizen wants. The second is what the government and controllers want. So I think you have this position where if I can see where I paid, what I paid, why I paid, and when I paid, which is useful for me to know, then that's good for me. If that's then given to a third-party authority, that's not good for me. And again, it goes back to this friction between decentralized finance and centralized finance, which is, the government and the bank should have no right to monitor my life. So then we get into digital identity, we get into decentralized identity control, personas, and everything that goes around that, which is to say, whatever I do, whenever I do it, that's my business. It's not your business. And I think there's another great issue there, which goes back to the libertarian versus statist issue. So in decentralized finance, whatever I do, whenever I do it, that's my business. In a decentralized cryptocurrency, I have that control, but I don't have the risk management. Whereas if I have it in a central bank or in a national bank, I do have that risk management, but I don't have that privacy.
There is the other angle to it as well that says absolutely what you're doing is your business and it should be, private to you and anonymous to a certain degree, etc. But at the same time, we live in a world that's got a lot of bad actors. So how do you manage to protect the good from the bad when you know that you have to at certain level monitor the bad people to protect the good people and you don't want to monitor the good people? It becomes a complex discussion again, right?
Well, I think infosec and crypto and hacking and the whole area of exposures and frauds and schemes is fascinating. I mean, at the moment, in fact, I just posted something on my blog today about authorized push payment fraud, which I don't know if it's common in Finland, but it's common in England. And there's a whole load of regulations and policies just being launched. The main policy being from the Payment Services Regulator in Britain to say that if you are exposed to, for example, a romance scam or a CEO fraud, which if you're not familiar, Google them, then the company that authorized the payment is liable for up to 500,000 euros for your loss. And there's a big argument about this because that's very high, considering 100,000 euros under the compensation schemes for banks. to say suddenly it's 500,000 for a APP fraud, authorized push payment fraud. And this is where we're going to have a constant argument in the next few years. And the only difference, to be honest, between now and 100 years ago is 100 years ago, people used to rob banks because that's where the money was. Now they rob the internet because that's where the money is.
Yeah, no, it's very true. But I want to pivot again back to your book because it's your book that's really interesting here. And I know we're talking about all of it, but
Even though
from
Bill has not read it, thank you very much.
um, who did you write the book for? I mean, generally you could say that the book was written for educating bankers on the future of money and your perspective on where they need to be going, or it could be written as a book to help the general society to understand how they should look at money from their perspective going forwards. Or did you write it for both sides?
Yeah, I think I write for everybody. One of the key themes that I always do, if you read my blog regularly, is translate acronyms and explain what they mean. And I do that so that, if my mother was sitting down and reading my blog, she would understand where I'm coming from. Or if my children were reading my blog, they would understand where I'm coming from. I've got two little 8-year-old boys. And, so the idea is that sometimes I do get technical. Sometimes I do go down little avenues that are just purely for the financial industry and the fintech industry. But it's really designed to be read by people who are primarily in technology, fintech, and banking. But equally, they could come from anywhere if they're interested in the future of money, which is my passion.
Yeah, actually, you've mentioned your blog twice. It was a chance now for you to do some self-promotion here. I read your blog almost on a daily basis and even sometimes reshare some of your material on LinkedIn, but it's thefinancier.com, right?
The financer.com,
Okay,
and it's
Financer. Yeah, I need to get better at my
SER.
pronunciations.
A lot of people think it's the financer with a CER, but it's SER. And basically, I got made redundant 20 years ago, and whilst trying to find a proper job, I started just writing and talking and networking and meeting with people, and created a couple of businesses, the Financial Services Club and the Financer. And ever since the 1st of February 2007, because I'm really boring, nerdy, and geekish, I write every single day something about the future of money, technology, and finance on thefinancer.com. And that's what's led to the 18 books and what I do today. So it's the only reason it's been successful is, unlike an awful lot of people, I don't work for a company. I don't work for a boss. I am the boss, and I just say what I think, which is the reason why I'm a troublemaker.
I do enjoy reading what you post on a daily basis, and it is very refreshing. And you're absolutely right. The fact that you're not sort of having to tread the line of a corporation, it makes it a lot more interesting to read.
And we need
Thank you.
troublemakers, of course, in the banking industry. Not the kind that want to overthrow the entire government and the financial system, but the ones who actually make sense, trying to find the middle ground. And I think, Chris, you're doing a good job there.
Well, I have this self-censorship, and in fact, I got a very nice compliment the other day from a friend, Tony Craddock, who's with the Payments Association, and they gave me a Lifetime Achievement Award in November, which shocked me because I don't ever get such recognition, but suddenly I did. But basically, he said, you walk the line. And so what I try and do in my self-censorship is I try and annoy people that I know in the financial industry realize that they can't deal with the issues that they're dealing with. And yet I understand those issues, and I think I can solve them, and do that with, working with them, but also with the companies that I work with. But at the same time, just not try and go over the line. And in fact, something occurred to me many years ago, which is that I tend to come from a banking view, which is I know I have problems and I need to solve them. But at the same time, I need to understand the problems and articulate them so I can solve them. I don't come from the view of you're a banker, you're full of rubbish, I hate you, and I'm from outside the industry, I'm going to destroy you. And there's lots of people who think talk and think and write that way. That's not my way.
Fantastic. There is back to the book and the discussions around DeFi and CeFi, Hi-Fi, all of these. High five, high five. I'm going to bring in a new segment for season 10 that we're going to follow through on every episode where we are talking about money. And a little bit back to treading the line here, Chris, in the context of your book and your perspective and your view going forwards now around this world of decentralized, centralized cryptocurrencies, etc. What's your perspective on the central bank digital currencies?
Well, on the one hand, I know why central banks need to do digital currencies because they're worried about cryptocurrencies. And then you add a layer onto that and say, why do we need physical currencies in the age of digital? So we need digital currencies, which is the reason why central banks are worried about cryptocurrencies, because they could replace fiat currencies, the US dollar, euro, the yuan. So I can see the logic and the drive towards central bank digital currencies, and we've covered all the bases around who do you trust, why do you trust, what goes behind that, what's behind those currencies. But the bottom line is how are they implemented? And one of the concerns is that if consumers and retail organizations can access central bank digital currencies direct with no intermediary, a wholesale bank or commercial bank involved, then there's issues to the whole financial system. And that's where the issues are being debated across the world. You've got different models being debated in different constituencies. The thing I love is that the first two countries that created paper money were Sweden and China. And the first two countries probably to implement digital money are going to be Sweden and China. So watch those countries. And they're already near there. I think the challenge and the issue is the wholesale, retail, commercial structures that go around it.
Yeah, maybe if you allow me to expand the first point you made about why do central banks do this. And I agree to a certain extent, it is about having something against or to complement or replace crypto. But I think it's a broader issue than that. It's about sovereignty. And I think, whether that's decentralized systems or private currencies in general, threatening the position of the banking system and indeed the central bank itself, this kind of payment sovereignty is a critical part of what we do. And I think that kind of crypto goes as a subcategory of that element. The other option, again, extending on that a little bit, is the fact that the central banks and the political regimes around them want to have a public option to the private sector solutions out there. So again, feeling that since the entire digital payment ecosystem is controlled by private entities today, again, there's no public way to pay on the internet, if you want to kind of put it straightforward. Then having this public option feels like a balancing issue for them in many aspects as well. But yeah, again, I think it's an interesting topic, and we'll see which one will be first. I mean, looking at what's happening in Sweden, it looks like they're going to be waiting for the European Central Bank to decide what they do with the digital euro before they go ahead with the e-krona. We know that, of course, Sweden was a front runner in this whole thing. I think e-krona was together with China, like you mentioned, Chris, first one out of the gate to talk about digital currencies coming from the central bank. So yeah, interesting point.
So Ville, just as a checkpoint with you, you mentioned sovereignty, and that's the thing that an awful lot of Gen Z don't want. They don't want national control, central control, government control. They want freedom. So why would they want a central bank digital currency?
Yeah, I think the question of sovereignty is always, when everything is going well, you don't care about that stuff. But as soon as stuff start to go wrong, you need something to rely on, something that is tangible for you, something that is connected to the world, the physical world around you, and to a large extent, the governments and the networks around the governments, again, being very physically accessible to a large extent in the countries where we live. I think that's where you fall back to always. And I think that's why since the nation states are defined by the legal systems and the law in those countries, it also, these systems, whether they're global or not, somehow need to be connected to the legal and law and the governance surrounding you in the society where you live. And maybe a bit of a far-fetched example on this point, but for example, I'm looking at the price of Bitcoin ticker right now and the price of Ethereum ticker right now. And every time, all the values of these virtual currencies are defined in US dollars. Since one Bitcoin is one Bitcoin, they shouldn't really care. What is the dollar value of that? And the reason why the dollar value is there, I feel, is that it needs to be somehow connected to the world around you, where the prices are defined in dollars or euros instead of.
Let me put this to you, which is, if the network of the people through cryptocurrency provided me with reciprocity and repudiation and all the legal frameworks that go around the financial system today, why would I need a CBDC?
Yeah, good question. I think this remains to be seen. One argument that speaks towards centralization or central components instead of decentralized is that efficiency and basically the rules of capitalism dictate that every system leads into centralization ultimately instead of decentralization. Decentralization is very expensive.
It used to.
Yeah, well, again, there's many examples from the very recent past where we've seen this happen. But again, it's a 100-year game instead of a 5-year one. So I think we'll see how this evolves. Maybe the past is not
revolution.
The future that much.
Well, unfortunately, as is always the case, fantastic discussions, and they just get better and better and warmer. You don't want to stop. You know, I think at some point in time, Ville, we need to start doing pub evening episodes where we sit in a pub with a whole load of fantastic guests like Chris and just talk for hours and record it and make it available out there. But we are running out of time, unfortunately. So, Chris, as we sort of wind down, what's next for you?
I'm still doing my normal stuff, traveling and speaking around the world and writing and thinking. And I guess my latest theme is around trust and transparency and transactions, which might be the title of the next book, which I'm really going to the whole of the conversation we're having here, grappling with trust and the fact that if I invest in this or invest in that, and I have this portfolio, where's my risk? So that's my big thing. Other than that, not writing any more children's books, living in Poland, and looking at buying more property because that's where the assets are the most stable.
Fantastic. Now, we do have this part of the podcast that we've had from day one where we ask our guests if they've got an interesting fintech or banking joke that they'd want to share with our listeners. Ville normally does it at the beginning. I do it at the end. I don't know whether, Chris, you've got a joke you want to share with us all. If not, then Ville will have one on reserve.
I wasn't expecting that. And the only one that comes to me is, how do you know when you meet an extroverted banker? He's the one that's not looking at his shoes.
Well, yeah, that makes it even better. The fact that we caught you off guard there, that's wonderful. So thank you, Chris. Thank you very much. Anything that you would have wanted us to have covered on this podcast that we failed to talk about in the last couple of seconds?
Not really. I mean, I think we covered all the bases except for the metaverse of money and quantum computing and 6G, 7G, and everything that's coming next.
Small topics like that.
That will be in our next conversation.
We'll bring you back for that. Absolutely, yes. Ville, any final words from you?
Yeah, I had a good joke in reserve, but maybe I'll reserve it for the next episode. So
I think you should. Keep it in the back pocket just in case, right? So, Chris, if people want to reach out to you, find out more, continue the discussion, what's the best way of reaching you?
Thefinancer.com or Chris_Skinner on X or on LinkedIn.
Fantastic. Ville, if people want to talk to you about some more of the stuff that you've babbled about this time, how can they reach you?
I always think that I should do something absolutely crazy and start like a Truth Social account or something like that. But since I haven't done that yet, you can find me on LinkedIn.
Okay, and the same for me. You can find me on LinkedIn. My X account is slowly, painfully dying, so don't reach out to me there. And as for
Like
Fintech,
most people.
exactly, yes. And as for Fintech Daydreaming, you can find us on our website, fintechdaydreaming.com. You can find us on LinkedIn, and absolutely, you can find us on YouTube. We are really enjoying the growth of subscribers on YouTube as well as on all of our other channels. So we ask of you, if you've enjoyed this episode, this fantastic discussion with Chris, first, go and buy his latest book. Absolutely. Secondly, hit the subscribe button on our podcast and make sure you hit the bell so you get to hear about the next episodes. And lastly, recommend us to 2 of your friends. That's the only thing we ask. Recommend us to 2 of your friends. We'll be back in 2 weeks' time. Hope you've enjoyed the discussion. Thank you for staying with us for the whole episode. This has been Fintech Daydreaming.
This is Fintech Daydreaming.